What makes you think that global companies deserve a place in an Indian investor's portfolio?
In the US is obviously there are a lot of Trump memes that translate to real stock price performance. So you can make money following what he's doing, you can make money doing the exact opposite of what he's doing, and both seem to work.
Okay, this is a theme that I'm really bullish on and I want to act on it from an investment point of view. And more importantly, how do you even identify them in the first place?
Mark Zuckerberg made this comment like, yeah, it will be unfortunate if we lose 100 or 200 billion dollars, but it will be more unfortunate if we...
I'm a risk-averse guy in a personal capacity as well. I feel very apprehensive of getting exposure to those themes purely based on the fact it's too hot. How do I rationalize myself here?
So as a retail investor, someone who's doing it in personal capacity, the only thing we can control beyond a point is...
The only thing when I hear AI, maybe all these chips that NVIDIA is making, or maybe also data centers, I can't think of any other way people make money in the AI race.
If we extrapolate the pace of progress in terms of LLM optimization, do we need these data centers in the future?
Every point in time in history, I think war has been something, or let's say all this geopolitical tension has been something that has remained. Is there anything special about 2025? I'm still not very sold on the fact that war is a theme worth betting on. Why are you so sold on the fact?
Because
So, thank you, Sid, for agreeing to talk to us.
No, thank you so much for having me here. It's my privilege.
The topic that we decided today is, I think I'm finding it hard to even frame what we'll be talking about, but honestly, it's a way for me to learn more about a lot of themes playing out and maybe just look at investing from a different point of view.
Sure.
With that said, my first question to you stands that you come from a background where you've looked at global companies a lot for investing. What makes you think that global companies deserve a place in an Indian investor's portfolio? Why do you think that's the case?
Look, I think some of the answers are fairly traditional. That's stuff that people have heard before, which is that if you have 100 rupees on assets, obviously a large chunk of your wealth is tied to India, whether it is real estate, fixed income, equities. But it's helpful to have some diversification in case the rules change. Like a lot of people have forgotten that there were countries like Iran, Afghanistan were very prosperous in the 70s, and then they went through some political turmoil. Today, touchwood, we have very stable political leadership, but obviously if that changes, what is the get out of jail free card? Now, Indians unknowingly have been diversifying globally for a long time, which is by buying gold. In a way, it's a global commodity. If rupee depreciates versus dollar, you profit from that. So I would say Indians are actually fairly mature on that front, but the first thing is it's just a hedge against political instability in your own country. Now, I don't really see that happening today. Actually, we have a very stable sort of political environment, but that is one benefit. The other benefit is there are certain sort of themes or sectoral changes that you can't really get meaningful exposure as a retail investor in India. So obviously, the most classic example is AI, right? Like you can invest in AI in businesses that sell the chips, in businesses that sell the power equipment. Actually, interestingly, you can get exposure to OpenAI by buying SoftBank. SoftBank, a large part of the equity is actually now tied to OpenAI. You can't really do that meaningfully in the Indian stock market today. Maybe over time, as more tech companies list, we will have our own domestic exposures. And there are a few businesses in India that actually meaningfully benefit from it. But that is sort of the second reason, is that there are just certain themes that you can't really get in India, but they have the ability to, I guess, reshape society, certainly reshape industries, and therefore reshape people's financials. And so if you can get exposure to that, sort of why not? That I would say is the second thing. The third thing is there comes a point in time in different companies' economic life cycle where it could be that they want their stock market to work. And so in a way, you have the government of another country trying to prop up its own stock market. 3 examples of that in the last 12 months are Korea, Japan, and China. Like, for example, the president of Korea has said, I want businesses in Korea to be good capital allocators, trade at book value. Like, if you listen to that speech and you don't know who the person is, you'll be confused if it's a business school professor or the leader of a country. But he literally wants the stock market to work. In Japan, they have said they will shame companies that are trading below book value. They want people to get rid of cross holdings. In China, you are getting low cost margin loans to buy shares, and for a certain minimal amount, there is actually a backstop from the government. So there is no risk for levering up. So when these types of measures are being taken and entry multiples are forgiving, you don't have to perhaps even be the best stock picker. You could have just bought the country's ETF and done well. I think Korea is up 30-40% this year. It's one of the best performing markets globally. That's a good reason to be globally exposed, right? So yeah, I would say these are the three reasons why I think it makes sense to have some percentage of your money lying in global assets.
Honestly, of the three reasons that you pointed out, the one that really fascinates me is the themes, Ola.
Yeah.
Because the thing is that every time I, let's say go on Twitter or I'm trying to read upon what's happening in the business world, oftentimes I see a lot of financial media covering things that are very global in nature.
Yeah.
Let's say as an Indian, though get fascinated about all these things, learning about new businesses and how they're dealing, but also feel sad about the fact that I as an Indian can't really do much about using that knowledge and let's say making investing decisions.
Yeah.
Which is why this themes wala point really fascinates me. With that said, why don't, we talk about a few of these themes, AI obviously being one. Maybe if you could list a few themes that you think stand out in the global framework that maybe as Indians, we really don't have access to in the Indian markets. And then maybe we can discuss more on each of these themes separately.
Yeah, absolutely. So look, I mean, hard to discuss the themes without talking about the elephant in the room, which is AI. But just to put some numbers on it, the total capex of Mag 7 businesses is $250 billion every year. And so this is a theme. I mean, some people call it a bubble. Some people think this is just the beginning. I don't know where we'll end up, frankly. But the limited point is $250 billion a year is being spent in trying to make AI a reality. Whether or not it's a bubble, there will be certain companies that will disproportionately benefit from this sort of spend. And so that is one theme that you have to mention in any conversation because it dominates, for example, discussions in the US stock market. It's after all the world's biggest and best performing stock market by a huge measure over the long term. So that would be one. Obviously, GLP drugs is something else that we've spoken about, but the innovators, whether it's Eli Lilly or Novo Nordisk, they are actually listed outside India. And in fact, it's not just about the innovators, even the distributors. So I was reading this thing, which is fascinating, which is apparently in Brazil, a lot of GLP-1 prescriptions occur via the dentist. Because when you go to get your teeth realigned, you kind of treat the dentist culturally as your beauty advisor. And so to some extent, they drive adoption of GLP-1 in that market. It's not like when we talk about GLP-1, everyone in India obviously is focused on the innovators, manufacturing for the innovators, and the manufacturing leg of it. But outside India, there are actually businesses that make a lot of money on the distribution. Or in fact, I was reading this report recently that because of GLP-1, once people seek the benefit of cosmetic improvement, maybe in their sort of mental well-being or, sort of perhaps in their relationship status or what have you, they might spend more. So there are other cosmetic medical procedures that are actually seeing an uptick because of GLP-1. Because once you've started, maybe you want more. So that's another theme that you can profit from very directly or on its first derivative. The third one, which is sad for the world, but is defense. I don't think in my last 10 years, I have seen so many hot wars. Like we have seen a war, obviously India, Pakistan. We are seeing what's happening in Israel, what's happening in Ukraine. Very recently, I think a week ago, Russian aircraft actually passed over the Polish airspace. And China did this massive military parade, which I don't know if you saw a video. They invited the leaders of Putin and Xi Jinping did like one of the biggest military parades China's done in the last 2 decades. Trump did his first military parade in Washington in like 15 years, did after he came to power. So clearly this is something where these businesses were generally stable businesses. Now they're going through a massive, sort of upgrade cycle because once you have hot conflict, you spend a lot on bullets and bombs. You have to replenish your inventory. And the second thing is a paradigm shift. Humans, there's this phrase you've heard of, work from home. But you can actually apply that to military and now say it's war from home because you have drones and you're just controlling the drones remotely. So that I would say is like a third theme. And then the fourth theme, which is interesting because in India, obviously, businesses receive a premium based on how little the government may be involved in the business. But what we have found outside India is that the government can be a big driver for returns. I've obviously mentioned China, Korea, and Japan broadly asking companies to get their act together to make money for shareholders. But what is more entertaining in the US is obviously there are a lot of Trump memes that translate to real stock price performance. Like he has said he wants to bring housing costs down. So mortgage refinance companies or like Fannie Mae and stuff, where he wants to raise the limit on how many mortgage-backed securities they can buy. They've done really well. And then there's the Trump taco trade also, which is he's saying he's going to sanction China, but actually he folded 1 week later. So maybe if you had bought Chinese stocks when he said that, you would have done well. So you can make money following what he's doing. You can make money doing the exact opposite of what he's doing. And both seem to work. So, but overarching point is that the government can play a big role in driving stock price performance if the government chooses that to be its national priority. And I guess I've been investing for over 10 years. I have never seen so many countries which have taken the stock market so seriously. So that would be actually a theme that is, we can talk about it if you want.
You've highlighted all these themes, right? And one thing that bothers me, and I have a question here is, obviously these 4 are the themes that stand out for you.
Yeah.
But I'm pretty sure there are other themes as well playing out in the world that you aren't looking at. So what makes you feel, okay, this is a theme that I'm really bullish on and I want to act on it from an investment point of view? And what makes a theme stand out, but you still don't want to act on it? How do you differentiate between the two? And more importantly, how do you even identify them in the first place? More from a process point of view, walk me through it.
Correct. I mean, look, like part of it is curiosity and serendipity driven, right? If you're reading, like if you're listening to a podcast where, Sergey Brin is talking about how like he's okay to bankrupt the company, but he can't lose the AI race. Or like Mark Zuckerberg made this comment like 3-4 days ago, which was, it will be unfortunate if we lose $100 or $200 billion, but it will be more unfortunate if we lose the AI race. So when you hear comments like that made by folks who have this tendency to go all in, you can call it a bubble, you can not call it a bubble, and that's a decision point you have to make. But these are numbers that are jaw-dropping, that are made by people who are in a position to invest at a scale that will have ramifications across the world. So one is sort of just following what business leaders are saying, not what they're saying in conference calls, this is how much I'm going to beat by, this is what happened to margin, but their sort of big picture vision for the business and how big the numbers that they're talking about. So that I would say is serendipity and curiosity driven. The second thing, which was something I learned early in my career when I was in venture at Sequoia, which is picking an okay business in a sector that has phenomenal tailwinds beats the heck out of picking the best sector in a best company in a sector that doesn't have tailwinds. To what I was alluding earlier, like if someone is talking about these jaw-dropping numbers, you know that you have to focus on AI. You may not get the best expression of how to be bullish on AI, but when the numbers are so big, how does it matter? So one is obviously following business leaders, being generally curious, serendipity. The second thing is now sort of unfortunate, but social media is actually a source of idea generation. I'll give you examples which are quite funny. So like GLP-1 drugs did not get popularized first in sell-side healthcare conferences. It happened on Instagram. It happened when like the dentist is recommending GLP-1 drugs to someone who got their teeth realigned. It's happening when, you sort of see a secular decline in like alcohol consumption, or when you see people wearing more whoops, more Oura rings, and people don't want to maybe go out as much at night. So you see behavioral changes. It's not so much that someone was shouting from the rooftops that this is going to reshape society, but you saw these micro behavioral changes, perhaps on social media, perhaps in real life. That's sort of it's actually a very powerful source of idea generation, because you're not out there looking for an idea that, you can put your money to work. It's like sort of, it came to you. So that I would say is the second sort of framework. And then the third framework, frankly, is like I was watching this interview from Jeff Bezos, and he was talking about how he founded Amazon. He just said that when he started thinking about doing an internet business, the internet was growing at some absurd pace. And then if you look at like 100 or 200%, I think month on month or week on week, some crazy number, I'm obviously misquoting it. Then when you look at Brian Armstrong, the founder of Coinbase, when he was talking about the early days of crypto, funnily enough, he actually pitched Coinbase at the student investment club when I was in college. None of us took him seriously, the joke's on us. But again, part of what his pitch was that this is a space that's growing so quickly that it doesn't matter how small the base is, you should be around. So sort of, one is obviously looking at folks who have already made it, where they're deploying large sums of money, because that will have downstream impact. The second is just around us. If you're seeing massive behavioral shift, and yet it's not really getting as much attention in financial media, that is interesting. And then the third one is you might be looking at a sector that is starting small, but it is growing at such a phenomenal pace that it might become a big deal 4 or 5 years down the line. Those are, I would say, like the three, I guess, pools of finding ideas that work for me at least.
Sid, one thing that still bothers me, and I want to nitpick on this, sorry for doing that,
No.
is that whenever, we get really convinced about a thing, maybe we are late, maybe we're not. That's not the point. But the point is that the probabilities of you being right in a theme which gets as hot as, let's say, AI, I don't know what are the odds there.
I 100% agree.
That really, I'm a risk-averse guy in a personal capacity as well. I feel very apprehensive of getting exposure to those themes purely based on the fact it's too hot. And I know there is some truth to it, but I also know for the fact what you're saying is right. How do I rationalize myself here?
First of all, this observation is 100% right. If you look at big internet companies today, Uber, Instacart, maybe Zomato in India, Swiggy in India, obviously Zerodha, Grow, what have you. These are internet-enabled businesses that have tackled sort of an offline problem, and sort of it's a hybrid between a bits and an atoms business. Maybe less so for brokerages, but more so for food delivery. All these ideas were actually tried in 2000, right? Like there was E-Trade in 2000 for brokerage. There were obviously Webvan that did grocery deliveries. It became a meme for the .com bubble bursting. There was a pet food delivery company. Now obviously Chewy is a listed company which does pet food delivery at scale. It's like a $10 billion company. All they do is deliver pet food. All these ideas were actually tried in the .com bubble. And I guess depending on how you look at it, the investors were right. They were just maybe too right, too early. Like they were 2 decades early. And so, it's a big risk. And you have to recognize that the guys who are funding these businesses, like for example, Benchmark, I think invested in Webvan or one of these companies. They were also an early investor in eBay. They clearly got e-commerce right. These are smart guys. They have good venture funds across cycles. And they get the timing wrong. So as a retail investor, someone who's doing it in personal capacity, the only thing we can control beyond a point is sizing. Because if we've sized appropriately, if we are wrong, it won't kill us. And if you're right, you could still make life-changing money. For example, if you bought Bitcoin in 2015, at that point, it had already had one sort of mini boom bust cycle. And you were like, I don't know, it could fall 50% next month. I might put 1% of my net worth in it. Now, if that 1% of your net worth goes to zero, it's not great, but you'll survive. But accidentally, if you're right, you will still have a needle-moving outcome, maybe not a life-changing outcome. In Bitcoin's case, actually a life-changing outcome, but in most cases, a needle-moving outcome. So I would say the biggest defense is sizing. And the other thing is like the experience of going through that exercise once will teach you a lot about yourself as an investor. And that will be helpful for how you deploy 99% of the wealth. For example, if you are someone who does not get bothered by volatility, as an example, perhaps it's okay if your stock portfolio is more small cap heavy because you don't get bothered by the daily fluctuations. If you are someone who gets bothered by daily fluctuations, maybe you need to buy more gold, maybe you need to do more large caps, but you will not discover these things just by reading a book. You will actually discover them by seeing how you behaved in such situations. And so in a way, like learning how to invest in a theme is good for you. It will expand sort of your horizons. You'll learn about a new sector, but you'll learn more about yourself as an investor. I guess the earlier in your career you find out what works for you, the more likely you'll have a better investing outcome because you will make sure that the 99% is optimized for your behavioral strengths and weaknesses. So that's, I guess, my long-winded defense for why you should do it, even though the chance of getting it right are low.
Okay, I'm sold that I should do global and I should explore such themes. You've done a great job with that.
Thank you.
Why don't we, let's start talking about the themes.
Yeah.
And the first theme that has been constantly been there in our conversation is AI, right?
Yeah.
When I say AI, and I'm a total noob when it comes to anything AI, I'm just a very active consumer, but I don't look at it from an investment lens.
Sure.
The only thing when I hear AI, the only thing that comes to my mind is either all of these frontier LLM technologies like Claude, OpenAI, all of these, or maybe all these chips that NVIDIA is making, or maybe also data centers. But that's where my horizon stops. I can't think of any other way people make money in the AI race. And I know for a fact people do. You guys are also betting on it, right? How do you view, again, the AI thing outside of these three? And maybe if you could just tell me a bit more, how do you view AI?
Yeah, I mean, if you just look at first, maybe the ecosystem, the value chain would be helpful, right? So you start off, what is artificial intelligence? You're basically trying to take knowledge work that humans are doing today, let's say, and we have sort of food, coffee, what have you, and we produce some output at work and we get paid for it. You're trying to replace that, I mean, initially augment that, but obviously the bull case for AI is maybe replace that eventually with sort of a large language model. The large language model, it needs to obviously have algorithms and a certain sort of way to pre-train and learn and reinforcement learn and build on context. Even if you have that sort of large language model ready, you need GPUs, you need semis to actually train the model on. And to train the model and to eventually deliver the model at scale, you need power. So in a way, very simplistically, when you look at what AI is doing, it's like knowledge work comes from intelligence, which has so far been a relatively scarce commodity, which is powered in a way biologically through like food, coffee, whatever. And it's turning that into a scalable sort of commodity, not a scarce commodity. It's something that should be a lot more freely available, that is now powered by energy. So that is sort of conceptually what is happening, what people are trying to accomplish sort of with AI models, right? With large language models. And so the different parts of the value chain, obviously the semiconductors are really important for the training and for the delivery. Then you need data centers. That's really again important for the training, for the delivery. Now these data centers need to be powered by power. So again, like sources of energy, how these data centers are cooled. So there's a lot of industrials that get involved in ensuring that these data centers are hyper optimized, because again, as I highlighted earlier, Mag 7 capex is $250 billion a year. So that's a lot of money. You want to ensure that your money is well spent. So that is sort of the third level. The fourth level is obviously monetization. So I have taken a large language model. Maybe you have an OpenAI subscription and it behaves as sort of your personal assistant. That might be true at an individual level. At a corporation level, maybe your IT services, the backend IT ticketing system at Zerodha, maybe it's run on ServiceNow and now they have an LLM helping the customer support team. So that would be sort of an application layer. So starting right from the semiconductor and foundational models, which I would say is like upstream, you can move all the way downstream. And downstream also, there are tons of different ways in which AI can help businesses. I'll give an example that's very relatable. So like, this is interesting, but like Spotify, if you look at Spotify, they take music that they buy from music labels and they serve it to us as consumers. Now, I learned recently that Spotify makes more money per listen if it's a recommended song versus if it's a song that you and I selected. So what helps them make their recommendation engine better? AI. So in a way, it's even helping a streaming platform improve its gross profit margins. So my limited point is like, in my career, I have never seen a foundational technology have such a broad-based impact on technologies or on businesses across the world. So there are many parts of each value chain that we could look at, where you could spend your entire sort of time just saying, okay, I will focus on industrial. So I will just focus on the app layer. But this is the ecosystem that I think you have to like, and this is the value chain you have to first map out to figure out where you want to spend your time.
So if I understand it correctly, if we understand the value chain well enough, we'll automatically identify the pockets where we have the AI wave helping everyone come up, creating a lot of economic value.
Exactly.
And I'm pretty sure...
And capturing that economic value.
Okay.
So we have to capture that as shareholders.
Right? Absolutely. Yeah. Like during your study, I'm pretty sure you've spent hours, days, weeks, months doing that. Where are a few pockets where you think a lot of economic value is there to be captured? And they stand out for you. Obviously, I'll expect some non-obvious answers from...
I'm not going. NVIDIA and OpenAI are not allowed.
So, because again, this is not a way for me to know good places to invest. But a good way for me to think, how do you look at a theme? And then how eventually that translates to an investment?
Absolutely. So actually, let's take one of the biggest debate points with how artificial intelligence will be served or consumed. There are two schools of thought. One school of thought is we'll have these large language models in the cloud. They will be hosted in some data center in the middle of nowhere. Every time you have a query, it will be routed to the data center. And then the data center will sort of deliver you an answer. And we will have like good networking and there'll be low latency. That's one worldview. Now, a lot of open source models have been coming up in China, which are far more efficient vis-a-vis the US sort of closed source models, because they have constraints. They don't have the same GPUs. And so their models tend to be tighter in terms of like how many parameters they are run on and whether they can be run locally or in the cloud. So one debate point with AI is that, okay, if we extrapolate the pace of progress in terms of LLM optimization, do we need these data centers in the future? Maybe the entire LLM is hosted on our mobile phone, and instead of like a 32 or 64 GB, maybe we have a 500 GB cell phone. And then think of the downstream impact of that. You don't need the capex build. You don't need to add power. It's way better for the environment. It's way more scalable because it's easier to get phones to whatever, like a consumer set, rather than build 50 different power plants. You don't have to go through permitting. So if you look at papers that Apple put out earlier this year, they actually talked about the path they want to go down is hosting LLMs on device. And that has very profound implications on is kind of negative, right? For the data center and for the power thing. What is it positive for? Memory. Because memory sort of demand then goes exponential. And anyway, there's a different school of thought when it comes to AI, which is, this is my personal experience, I don't know if it's your personal experience, like the LLM is way smarter than I am, but maybe what makes me valuable at work is the fact that I build on context that I have learned before and I self-improve. Whereas an LLM is sort of like an Einstein, but you're starting from square one every single time, right? Every time you ask a query, there's no way they're remembering what you've asked in the past and optimizing for that, at least not yet. But if they have to do that, they need to store your past queries, they need to learn and train on them. What does that need? Memory. So now the memory ecosystem in the US has been the worst place in semis to invest for the last 20 years. It has all these boom bust cycles. Why? Because until AI came around, memory demand was driven by what? By like, do you have a new iPhone launch cycle? Do you have a laptop upgrade cycle? So when you have an upgrade cycle, there will be this burst in demand and then it will crater off.
And sorry to cut you off, but the memory, when you say, what form factor? You're talking about literally those pen drives, SSDs?
Yeah, like storage.
Like literal storage.
Literal storage. And so if you see like memory semiconductor businesses have traded like NBFCs in India. They have historically traded on price to book, not even PE multiples. Like in India, even if you're a company that has poor unit economics, unless you're a lender, you're not getting price to book in India, right? But memory companies around the world. And the sector has just consolidated. And so today you're left with like, there's Micron in the US, there's SK Hynix, which is a South Korean memory business. Samsung has a memory business, but it's not pure play memory. And then you obviously have a Chinese equivalent because they're trying to go independent. Now, whatever you may say about where India's relationship is with China, where US's relationship with China, one thing you're sure about is that everyone is concerned that we don't want to rely per se on Chinese equipment because we are worried about data privacy. So how likely is it that the Chinese company will be a price disruptor in memory? Very unlikely, because the memory is literally you're giving away everything, right? So you're left with three businesses. So it's one of the few semiconductor supply chain issues where China can't be a real competitor, even if it wants to, not per se because they are worse at it or they can't get it to at a better price over time, because you might not buy it from them because you don't want it. And so you have these three companies. They were in a sector which was cyclical for the last 20 years. But if what I'm saying about AI is true, whether or not it goes on device or not, you need to store context for AI to become more valuable. If it will be far more valuable if it knows all my travel history, it knows my frequent flyer miles. It will be useful for me as a personal assistant. Today I have to re-enter everything. So memory demand is structurally inflecting, and we're starting off at a point where these businesses are valued as cyclical commodity players. So what's really interesting is this year, everyone is talking about NVIDIA. But the best performing stock in S&P 500 is not NVIDIA, it's Micron, which is the American memory business. One of the best performing semiconductor businesses in Asia is SK Hynix and its holding company SK Square, which are again memory players. And so I think this is sort of an underappreciated part of the sort of value chain, where again, like after moving up 50-60%, these businesses are 10-12 PE, and high bandwidth memory, which is what they sell to NVIDIA GPUs, that vertical is growing like 40-50-60% a year for them at scale. Now, it's also something that there are these blogs online, like Semi Analysis is a blog that just specializes in semiconductor research. They put out this interesting exhibit recently where they deconstructed an NVIDIA GPU and they looked at the bill of materials for different versions. And then they categorized the bill of materials into different parts like networking, memory, etc., etching, and so on and so forth. And they saw that the bill of materials for memory was growing the fastest. And so the point is that this is something that is anyway happening, whether or not it goes on cloud to on device. And if it accidentally goes on device, you have this sort of massive inflection. So that is one example of like an underappreciated.
Now, what's bothering me is, how did you come across this? Because again, I'm assuming when you, let's say, read across for everything AI, right?
Yeah.
You'll have a lot of things being thrown at you. What made you come across this thing? Was it the stock price of, let's say, Micron, which intrigued your interest? What's happening there? Was it that? Or was it an AI expert that you follow who talked about it? Or was it just a pattern of all of these things coinciding to form a, let's say, connection in your mind ki boss, something is happening there?
Yeah.
What was it?
I mean, so let's first start off with like the humble admission that I missed NVIDIA. And I never looked at it seriously as a business because I didn't have the foresight to ever think that they are going to be used for large language models. I always thought of it as a GPU player that is levered to the gaming PC refresh cycle. And with the added layer that they have exposure to crypto as well, because people were using NVIDIA for mining. There was a venture capitalist that I have started following maybe 10 years ago, Josh Lux, on Twitter. And then he highlighted maybe in 2015 or 2016 that actually this is going to be the biggest AI exposure. And obviously, knowing me, I ignored that. And I always thought of it as cyclical, and it was. He was right. He was perhaps 8 years too early, but he was right. And in 2022, when ChatGPT came out, obviously, then sort of the cat was out of the bag. And then you saw different data points that I could not connect. So like Facebook had a massive miss on CapEx. And people were like, what is this CapEx? Like, you're losing money. 2022 was a bad year for Facebook from a profitability perspective. You are saying you're getting disciplined, but what is all this CapEx? Now, that was foresight. He was buying GPUs before they became scarce because he probably saw the downstream movement. So we were like, okay, there's a prominent technologist venture capitalist, like who literally, Josh Wolf runs this fund called Lux Capital. They specialize in, their whole thesis is sci-fi becoming sci-fact. So that's the investment thesis. They were investors in Neuralink, SpaceX, Anduril, a bunch of these companies. So he said this 8 years ago. Obviously, I missed it. There were these other tangential data points, Facebook's CapEx spend, that I completely missed. So this time around, I was a little more prepared. He tweeted out saying he read this paper at Apple, where Apple talked about hosting the LLM on device. I was like, oh, this is really interesting. And then he said that if this happens, storage companies will benefit. So I was like, okay, I have to take him seriously, because he literally called the biggest stock market winner of the last decade accurately. He might be early, but it's worth paying attention. Then, obviously, if you read broadly, and you know about semi-analysis, you know that they have sort of this bill of materials analysis. You can actually see that the memory spend is going up. So, like, okay, there's one evidence there. Then if you look at these memory businesses, their overall financials aren't changed much, but they're talking about high bandwidth memory and how that's growing really, really fast. So I was like, okay, there were these 2-3 tangential data points that you could connect. And the fourth thing, I missed Facebook's CapEx spend in 2022. But now it's not just Facebook. Like, Google is saying, I'm willing to bankrupt my company, but I can't lose this race to AI. So imagine that the same data point, but instead of just Mark Zuckerberg saying something on a conference call, you have 7 of the biggest stock businesses in the US all agreeing to do the same thing. And what gave me comfort at the end is, okay, it's still valued at book value. Like, fine, if I'm wrong, I'll lose some money and it'll be a good lesson. I'll still learn something, but if I'm right, like, this is not going to trade like a price to book sort of company. It will get like a PE multiple. And so I just think prepared mind sort of coming from a place where I had missed to connect the dots before. But I would say, like, if there's a takeaway, it's just like, it helps to sort of read a lot and to read broadly. Like, you need to have different sources of capital. Because sometimes if you're getting the same information from the same blog, you don't know if they're biased, you don't know if they're making you biased. But if 4 or 5 different people whom you can say with some certainty aren't all talking and coordinating before they're putting something out, if they're all sort of kind of hinting at the same thing, maybe it's worth paying closer attention.
I think what I can take from here, like this whole conversation, is the fact that a good investor is a really curious person.
Yeah, exactly.
And curiosity in different spaces, when connected through all of these back contexts that you've built over time, puts you in a position where you're in front of an opportunity which could be life-changing.
Correct. In our fund, we have this quote which we kind of ingrain within the investment team. It's a Walt Whitman quote, which is, be curious, not judgmental. So like, if someone pitches you a memory company, your first reaction is, for 20 years, I'm seeing a boom-bust chart. It's always valued at price to book. I mean, that's the judgment. But the curiosity is, okay, there are these like 4 or 5 disparate data points. Maybe that, what has happened in the past may not transpire this time.
Sit up अगले theme पे आते हैं.
Yeah.
That is on war.
Yeah.
So honestly, AI as a theme, I'm convinced.
Yeah.
Because AI मैं खुद भी बहुत use करता हूँ. I use it very frequently. Because even in the end, even I'm a knowledge worker.
Yeah.
As much as I hate to admit it's helping me, I'm also worried कि मेरी job चली जाएगी. So I'm totally sold on the AI theme. But war theme is something that I don't know, because if, let's say, I was in the 1980s, I would be worried about जो मिडिल ईस्ट में हो रहा था, तब भी कुछ ना कुछ चल रहा था. 90s में जब इंडिया पाकिस्तान का skirmishes हुए, तब भी चल रहा था. 2000 में भी. Every point in time in history, I think war has been something, or let's say all this geopolitical tension has been something that has remained.
Yeah.
I don't know, is there anything special about 2025? I'm not a big student of history, so I might be totally wrong.
Correct.
But I'm still not very sold on the fact that war is a theme worth betting on.
Sure.
Why are you so sold on the fact?
Yeah, I mean, I would say, like, first things first, I'm not a history expert either, but if you just look at the number of hot conflicts, so there are different, there's obviously Cold War, where you're waging war through proxies or through economic means, and there's hot conflict where you're literally fighting as a country. Number of hot conflicts we've seen this year, I don't think we've seen for the last 10 years. There was obviously in India, Pakistan, there was that issue. There's an issue in Russia and Ukraine. There's war that occurred post the sort of terrorist attack in Israel. There was briefly an Azerbaijan and Armenia war that I think Trump wanted a Nobel Peace Prize for. So those are 4 that I'm aware of. I'm sure I've missed something. I'm sure there are things. When there are elevated instances of war, whether or not you know that the long-term history, the world has actually become more and more peaceful over time. Like there was World War I, there was World War II. The number of national armed conflicts is actually falling. Nowadays, wars generally are fought with like proxy actors, like maybe a terrorist faction or like a separatist group. But the specter of war, no government wants to be unprepared when it occurs. What would be terrible for a country is that because they look at this long-term trend and they have not stockpiled enough ammunition, and that once in a while black swan event happens. So I don't think it's per se the fact that we're seeing more hot war. It's just that it reminds us that you have to be prepared for war, and that can create sort of a destocking cycle. So that obviously is the most cyclical sort of angle when you look at conflicts. More conflicts means more bullets got spent, which means more bullets have to be bought. Unfortunate reality. The second thing, so I was reading this book. I'm not 100% sure if I have the facts right, but I'll try my luck anyway, which is in World War I was one of the few conflicts where the war started on horseback and there were planes at the end. That was the progression of technology evolution in a span of 4 or 5 years. Now, obviously, if you're a country that is dependent on horseback riders and you're fighting someone who has a fighter jet, that is not a war you're going to win, even if you have 100 times the population. Now, I would say that in the Ukraine conflict, we are seeing a similar paradigm shift. So there's this book that I highly recommend. It's called Kill Chain. It talks about, war is becoming more remote and more precise. So for example, back in the day, you had cannons, then you have artillery guns. Today, you can literally have a drone show up at the exact spot, loiter for the right amount of time and drop at the exact point in time. So precision is becoming important. And I read this on a blog somewhere that how there's work from home, now there's war from home, which is like you don't want to send your men or women on the battlefield because human lives are precious. But if a drone or a robot lost its life, that might be something that is more acceptable to the country. It's just an economic loss. And so because that paradigm shift of becoming more precise and on robots and drones taking over is occurring, countries have to rewire the way they fight. For example, the US built its dominance through a big sort of blue ocean navy strategy where they have 6-7 different aircraft carriers, groups with destroyers and frigates and submarines. Now, what did China do to combat against that? Is they said, okay, we have these hypersonic cruise missiles. One missile will down one aircraft carrier. The aircraft carrier will cost whatever, X billion dollars. This will cost like $20 million. So that sort of asymmetric change in paradigm, which makes the old method obsolete. For example, like even when India sort of got colonized, we had the population advantage, but it was a different technology that kind of got in the way, which is your opponent is fighting with guns and you're with swords. So that paradigm shift when it occurs, it's not so much that you're playing the cycle of, okay, there is an armament restocking cycle. It's like we had all these tanks, they are not relevant anymore. We need that level of fighting power, but maybe in drones. And that is sort of a structural shift that we have noticed very unfortunately because of what's happened in Ukraine. Where like if you look at Russia as a conventional military power, it is far more powerful than Ukraine. Now, of course, there's been heavy loss of life on both sides. It's very unfortunate. Part of why Ukraine has held its own is that they have sort of are ahead of the curve when it comes to drone-based warfare. Like literally in Ukraine, they hire professional gamers. You have DIY drone garage where people build DIY drones and then they fight them. So that second paradigm shift, I think, is what makes this category sort of, sadly, it makes the category interesting as an investment destination.
And when we talk about investments in these spaces, is it again the manufacturers of all these artilleries? To be more specific, अगर हम next gen warfare में जा रहे हैं, drones or all of these frontier technologies, because that's the first thing that comes to my mind. But जैसे आपने AI में angle बताया, where the value chain and how everything moves downstream, there are different pockets of the economy which get benefited in a manner you wouldn't have imagined.
Exactly.
Is that something also playing out in war? Because again, my first instinct is all these manufacturers of all these weapons.
Correct.
And again, just one more thing. Throughout all of this, I think the only customer to this industry is the governments. Does that change anything, or how do you view that? Because again, whenever I've seen businesses, it's usually B2B, B2C, right? But यहाँ पे the only customer is government. How does that work out?
So second question I'll answer first if that's okay. That can work out really well or really badly. It just depends on the situation. So for example, your procurement style as a country may also change over time. As an example, India, rightfully so, in the early 2000s had this philosophy, which is, our boys are going to battle, we have to give them the best. So it's not so much about buying national, we have to give them the best because their lives are critical, they're patriotic Indians. That means that the Indian government was in some point in time perhaps even prioritizing a foreign military equipment provider, and rightfully so. I mean, the soldier's life is very important, right? Now, procure the best has changed to we have to build the best, because perhaps the governments realize that they have to be Atmanirbhar on this front. Our allies may not be as reliable as we want. And this is the Israel playbook. So Israel is actually a pioneer in many defense technologies, drones, vision. They recently launched this laser defense system. For $1, they can shoot down a drone. So they have now the upper hand in the economic battle for who will bankrupt each other first in fighting. Part of why Israel has such a thriving ecosystem, despite being a small country, their method was always that we want to build the best. So we're okay if we start off at a disadvantage, but we will procure locally. And I mean, if you look at exporters and countries that thrive through exports, why they thrive is because they give some protection to their home industry, but they force the industry to export to become globally competitive. In war, there's no forcing function. If you fight with your adversary who has global technology and you lose, you have the scorecard that your technology is not globally competitive. So government can sometimes be really good, because let's say yesterday the Indian government was okay buying technology X from overseas. And today they said, no, this has to come from India. That can be really good for your business or bad, depending on where you're located. And obviously the flip of it is, if your only buyer is the government and what you're making isn't that mission critical, how do you ensure that you get paid on time or that you get a good price? I mean, if everything is tender linked, it's one buyer. So I think it really becomes important that you have some technology edge and you are making something that is future proof for the country. Because then you are less likely to face pricing pressure, because in a way the government wants to support you because they want the ecosystem to happen. Israel is sort of the classic example. Now, coming to your first question on where in the ecosystem to invest, I would say today we are still, the reality is like, in AI, for me to be able to look at Micron as a stock or SK Hynix as a stock, I need that $50 billion in GPUs to be spent at NVIDIA first. Because if that is not there, then the demand for high bandwidth memory is not there. If that is not there, OpenAI doesn't deliver frontier models that then China comes up with an efficient, memory efficient version for. And so in a way, you can't really play with the proxy if the first direct beneficiary doesn't work. And I would argue in arms and military, we are still at that stage. For example, we found this company in Israel that makes vision for drones. So it makes the camera equipment now in terms of how improving its capability to spot adversaries at a distance, or reducing the volume or the weight so you can carry more payload, or improving the ruggedness or improving the battery life. There's so many improvements you can make there that make the drone more effective. Business like this, homegrown technology, 50% EBITDA margin, exploding order book, 13 times trailing earnings. If business is growing at that pace, it's a direct beneficiary. You almost don't have to look for a second order. So we have not focused there just yet. I'm sure at some point that could become interesting.
So one thing that comes to my mind here is AI we talked about themes and then the downstream. And the downstream there were relatively simpler things for us to understand. Yahan pe you talked about an Israeli company making vision for drone. This is already complexity square for a commerce graduate like me. Is it right for me, as who's not somebody an expert at, let's say, tech, still able to bet on that? How do you view that? Because again, do you have to be an expert in all of these things? Because again, here we are actually betting on the frontier technology compared to AI-like theme where we're more talking about downstream, jahan pe business models are relatively simpler, technologies are relatively simpler, and there's possibility of capturing economic value. यहाँ पे ऐसा नहीं है.
But I don't know if it, to be honest, I think you're underselling your own background, but I don't think it is that complex. So like if I had to distill it, right, there are sort of future-proof platforms and non-future-proof platforms. Now, future-proof platforms are not really as cyclical because you're starting off at a low base. So there it's more of a secular penetration and rearmament growth story. Obviously, if you're a legacy platform, like you make mortar shells, maybe it's very relevant today. It's like the Canon equivalent to the 1800s. It might not be relevant in 30, 40 years. But if you have been supplying to Ukraine and they've run out of everything, your orders are going to inflect. So I would say that the first layer of analysis is the product future-proof or not? And if it is not future-proof, then you should have a rearmament or a national security angle for you to get interested in the stock. For example, we just established earlier that perhaps aircraft carriers are not the future of naval warfare. It might be unmanned submarines that China has. It might be hypersonic cruise missiles. But if the government says that I want to build 3 aircraft carrier groups in India and it has to be done in India, and this is my marine mission, it doesn't matter whether it's future-proof or not. It becomes interesting. So I would say in the West, what thumb rule that has worked for us, it's sort of much simpler actually, I would say, than AI, is if your company is a supplier to a country experiencing hot conflict or high danger of hot conflict, even if you're not a future-proof weapon system manufacturer in entirety, like you might have 1 or 2 divisions, but you have legacy divisions also, it's okay. And the best example is Rheinmetall, which is Germany's largest defense company. They make tanks, howitzers, a bunch of different things. They have drone systems also. They are fine because if Ukraine is going to fight Russia, the demand for even legacy systems is going to go up. However, if you're a country where you're not directly involved in hot conflict, then the penetration story becomes more important. So if you look in the US, I think if you compare the performance of Lockheed Martin or Raytheon or some of these legacy platform providers to like Kraken Robotics, they make batteries for unmanned submarines. It's listed in Canada, but they supply to the US. Or if you look at Next Vision, which is the drone vision company in Israel, every time drones come in, they need vision, right? So that is future-proof. So these future-proof technologies are done better because the end demand in a way is driven not so much by hot conflict rearmament or by strategic priority, it's just change in paradigm. Now in India, we have, what I've at least experienced in India is, of course, if you look at some of the stocks that have done super well, Bharat Dynamics, the premier missile maker of India, or Bharat Electronics, they've done really well. There has not been as much nuance that I've seen that, okay, your order book aa gaya. We have an order book today. But is this platform going to be relevant in 10 years? If you're a simulator manufacturer, you're doing simulation for tanks, but what if people are not using tanks in 10 years? Then what terminal value even to give this business? I think that nuance is sort of what you have to add. And the mental model that we try to use is, does it enable war from home? If yes, that is a good thing. That is, every citizen in the country wants that, the government wants that. No one wants their own citizens to ever lose their life.
So this terminal value risk, you think, is more visible in these legacy businesses which have been focusing on very not subpar, but very basic technologies, and that is a more frequent occurrence in Indian companies. Is that what you're insinuating?
No, that's not what I mean. What I'm insinuating is that in legacy businesses, you have to be very sure that your growth over the next 2-3 years is sustainable. Like for example, if I'm making ships in India, now I will have phenomenal order books because we've decided we have to make all ships in India. But that is a one-time replacement cycle. That will end at some point. Whereas if I say I'm making drones or a drone, anti-drone defense system, you know that it's not just that the border needs that. Major cities need that. Oil refineries need that. There are so airports need that. Railway stations might need that. Like CBD, like Bombay's Lower Parel district might need that. That is much more of a secular growth story. So there you don't have to worry so much about growth. You just have to get the technology right. So I think that nuance, because abroad a lot of these cutting edge defense businesses, I mean, some are private like Anduril, but Scale AI or whatever, but some, not Scale AI, I forget the other name, Shield AI, but some are listed as well. Whereas in India, like Tata has a phenomenal defense business. I think Jindal has a future-ready defense business. They have a partnership actually with Shield AI in the US. Some of these companies are private. And so what you're left with in the new age is obviously Bharat Dynamics and Bharat Electronics, which are PSUs. But then some of these other businesses, they'll have that one replacement cycle because the country wants to become Atmanirbhar. It's the right thing to do. But what happens after that? एक बार आपने आपकी सब ships हो गए Indian, but आप growth थोड़ी करोगे because you have also recognized that cruise missiles I need to grow. So like Bharat Dynamics might have more runway than the other companies.
In this conversation, you mentioned about how future ready, let's say, their product is.
Yeah.
That helps us in having a view on how to look at the business, right? One more thing that comes to my mind when we were talking was dual application of all these things, right?
Yeah.
How big of a deal do you think that is? Have you seen yourself case studies where dual application also became a good source of revenue for all these companies that you're tracking in the defense space, where that actually changes the fortune of a company? Or do you think that's really an outlier and you can't really prove that as a rule with a few exceptions?
I would actually argue that I have not seen too many, if any, examples of dual application. One is obviously the world is a competitive place to do business. You specialize in selling to the government. That is a very specific go-to-market model that may not lend itself well to B2B and B2C. So interestingly, a lot of frontier military technologies sometimes may come from civilian use cases first. Like, why is China a leader in drones? Because DJI, which is the world's largest hobbyist drone company, is from China, and they built that first. Why are they so good at unmanned vehicles or battery? Because they were the earliest to adopt EVs with BYD and cattle. So I'm seeing that level of industry cross-pollination. I have yet to come across a company which is doing both, but obviously I'm sure there are counterexamples.
So Sid, third theme पे आते हैं जो आपने बोला था, which was around the fact that there are some countries which are actually wanting their stock markets to do well, right? First of that sounds very odd to me. Why would a country want that? Isn't that very biased? मुझे वो concept ही नहीं समझ आया. Why would they want that? Is there any incentive for them to do that? And if so, like what's in it for them?
Yeah, I mean the basic thing is wealth effect, no? So like if your country, main place where household savings get deployed is stocks, and stocks have done nothing for 10-15 years, people feel poor. And so now the stock market does well. Because of corporate actions, these people feel richer. Maybe they spend more money. It stimulates the economy. So that is the simple thing. The second thing is balance of payments. Let's say if you're a North Asian country, your balance of payments is favorable in a way. Your currency, you have a currency reserve because you export stuff and you're running a surplus. Now Trump is telling you don't export, or I don't want that to be a surplus because you're ripping me off, or whatever his logic is. You still want your currency to be somewhat stable. Maybe one other way to keep a currency stable is to get foreign investor inflows. If people see you as a cheap stock market where the government is forcing people to do buybacks, issue special dividends, eliminate cross holdings, they will buy your shares. Japan and Korea have been massive beneficiaries of foreign invested capital more than India, even though India is the growth story in terms of growing population, high growth across sectors, whereas these countries largely have population degrowth. There are some sectors that are growing very fast, but they still are absorbing more foreign investor capital because everyone's noticing, okay, he wants the stock market to do well. I can also participate in that. So that helps them from their currency standpoint also, right? Because they're able to balance inflow, outflow. So there are many sort of reasons, but I would say these are the two big ones that I think drive this decision.
And is this more a recent phenomenon that you've seen, or you've seen instances of that happening before as well?
I mean, I've seen instances both ways, like China, Korea, and Japan. These are stock markets that have historically not done well. They have derated over time. Because they've derated over time, retail investors have lost interest. Maybe they're speculating elsewhere. Maybe they're investing in crypto. Maybe they're investing in real estate. So the government actually feels that, hey, this might be a better avenue for investors to park their savings in, but they have been burnt so badly. So you need a cycle of the asset class maybe not working for a long time for the government to even show interest in it. Like the asset class does reasonably well, then there's no political appetite to do it. So I would say it's very contextual to the country we're talking about.
Okay, if it's very contextual, maybe you can pick any country you would like and help me understand what's the antithesis here. If let's say the government is really hell-bent on having that wealth effect kick in by having the stocks perform really well, there's got to be a downside to it, right? Because I don't know whether that's the right way for me to put it, but is it like they are artificially trying to get the results by engaging in these buyback programs, or as you mentioned, right, putting a hard stop on the margin funding that's happening, let's say in China. So what's the antithesis here? Is there
I mean, the antithesis is that the market is not moving because people are making decisions from their own two minds or whatever. It's not going because of mutual fund allocation. It's going up because the government has sort of gently asked folks to get their act together. What if the government says, okay, this is no longer a national priority, gone? What if the government just changes the rules a bit here and there? What if they introduce a buyback tax? That lever of shareholder value creation is gone. What if they're doing all this, but the market is actually expensive? Buybacks create value if you buy back the stock cheap. If the stock you're buying back is expensive, then maybe you're not creating value. So it's not enough that the government has to show interest. There have to be these other ingredients. The stocks have to trade cheap on an intrinsic value basis. Stock market has to historically have languished, so people have lost interest in it. You need like a favorable tax regime. You need all these other ingredients to also fall in place. Just the government saying, I want the stock market to go up, may or may not work.
So इससे पहले के जो themes थे वहाँ पे I still have some way of looking at how structural the theme is.
Yeah.
See, if I see AI just being adopted more,
Yeah.
I can see the runway, right?
Yeah.
How do I see a runway in such a scenario where, again, my whole thesis is based on the fact that the government, and let's say there's a regime change, that is a big enough risk, right?
100%.
How do I look at the longevity of this theme compared to जो हमने पहले बात की?
No, very good question, and we'll roll it into what I call sort of the Trump trades. So obviously, he's a very polarizing figure, to put it mildly. And there are Trump trades that have made a lot of money this year, and I'll talk about two of them. But it is to address your question on longevity. So the two trades I'll talk about, one is related to onshore manufacturing of semiconductors in the US, and one is related to housing cost of housing. Now, you and I both know that whether it's Trump or Biden, they were worried that all the semiconductors are manufactured in Taiwan. Taiwan's off the coast of China. Semiconductors power our lives. If they invade the island, the world basically stops, right? Like the world grounds to a halt. So for many years, through sanctions, through subsidies, they've been trying to move manufacturing to the US. So they had TSMC set up fabrication facility in Arizona. Now, what did Trump announce? Like, I don't know. He has been saying for a while that he wants semis to be made in the US. Now, he asked the government to take a position in in Intel. And what did he say? Eventually, we'll spin off the foundry division. Intel will specialize in CPUs, and the foundry will be a standalone foundry like TSMC or Global Foundry, and that's sort of the bull case for Intel. Now, you can question whether a Democrat would have taken such a drastic action. But what you can't question is there is intent from both sides of the house that we have to be Atmanirbhar in semiconductors. So that is a government sort of tailwind that you can rely on. So you have to ask yourself that is this an issue that is so fundamental to the opposing party and the ruling party that even if the person changes, the rule may not per se change. And I think if you can use that framework, it works. So it's funny because I'm using Trump as an example because he's very polarizing, but actually the two issues that he is hell-bent on sort of fixing, where you can actually place trades that benefit from him behaving the way he is, are issues that everyone in the US actually agrees on. So like buying Intel is like one way to do it because you know that he's going to try his best to make Intel as a foundry work. He will ask the government, the armed forces to procure. He can force Facebook or Microsoft to buy chips that are manufactured by Intel. That is great for Intel stock. I mean, historically, no one bought from Intel because the world of semiconductors had moved to either I'm a pure play manufacturer or I'm a pure play designer, like an NVIDIA, Marvell, Qualcomm, what have you. But now, and the reason Intel struggled is they tried to do both. But now he's saying you have to manufacture and I want to make sure you succeed in manufacturing. Now, so everyone gave Intel a discount. They were like, in trying to do both, you're doing neither well. But now in at least one business vertical, you can say you have the might of the US government behind you. So that is like one example. The second example is he thinks that rates in the US are too high. You see that every day on Twitter because he makes fun of Jerome Powell every day on Twitter. But he fundamentally thinks rates are high. Now, no politician is saying, no, I want home loans to be expensive. Every politician will say, I want home loans to be cheap. I would say that it makes sense, right? It's more money to spend on other things. So how do you bring home loan rates down? One rule that came in the global financial crisis in 2008 is the government told Fannie Mae and Freddie Mac, who are sort of the buyers of last resort for home loans, there's a cap on how much mortgage-backed securities you can buy. One way to stimulate demand is you remove the cap. If you remove the cap, they can buy more, so banks can originate more, so the cost of that home loan should ideally be a little lower. He's openly talking about doing that, and he calls it the Great American IPO with him ringing the stock price bell, and there's literally like a Studio Ghibli, like OpenAI meme on it on Twitter. But if you look at Fannie Mae, it's up 300% this year. And if the IPO goes through, it might actually do even better. Now, this is obviously not a stock recommendation, but the point is he has this top-down political view where even if the person changes, it's not like they're going to unwind this because it's good for society. Or like, for example, another way to profit from home loans is, let's say Trump succeeds. Home loan rates fall from 6% to 4%. If you and I had home loans in the US, what would we do? We will refinance. We have to save that money, right? So the largest refinance business in the US is a company called Rocket Mortgages. It trades at like 13, 14, 15, whatever times forward earnings. But that earnings estimate is kind of garbage in, garbage out because it's driven by how much the refinancing volumes are. If I told you that the refinancing volumes will be at 6.5% and today's home loan rate is 6.5%, you'll say, okay, there's not much growth. I told you, no, Trump succeeded. It's now at 4%. Then there will be an explosion in demand, so the stock will do well. So you know that this is his political priority. You know this is a way to profit from it. So interestingly, in South Korea, the prime minister or president, what have you, someone said that I want everyone to trade at book value. And a lot of South Korea, like India, has that holding company. Like, you know how in India there's Bajaj Finance, Bajaj Hold. They have that. But in India, buybacks are taxed. In South Korea, they're not taxed. So everyone is doing buybacks, and so it's one of the best performing stock markets this year. Is there any fundamental growth in the stock market? No. But the earning multiples are low, tax rate is favorable, and there's a top-down mandate that you have to put out filings in English, not just in Korean. So these are small things, but they help, right? Because they stimulate investor demand. So I think following the actions and seeing how likely is this action going to persist, even if the actor changes, might be the only diligence point that one could use, I guess.
And if I use this, frame of thinking on India, one thing that comes to my mind, and that's very rudimentary, is defense.
Yeah.
So defense, last I read recently, 2025 में defense procurement में और change आ रहा है.
Exactly.
Which I think will be less red tapeism, more private companies.
Correct.
They'll benefit, right? India angle में भी आप एक दो बता दो कि is there any strong view on how something should work, and irrespective of who's at the helm, it would continue to benefit, let's say, that sector, that theme, and eventually maybe we can end up captivating a few of that economic.
Yeah, absolutely. So one example is just look at like electronics contract manufacturing. Now it is going on for 5, 6, 7 years. I remember early in 2018, Dixon and stuff got 30p, Amber got like 15, 20p, and the joke was कि contract manufacturer है, पैसा brand में बनता है, Rossi brand में बनता है. What people maybe perhaps missed is the government is going to come out with PLI, or no one could have seen that coming. And the second thing is, if there are too many brands, they'll all fight with each other, so the growth will come from the contract manufacturer. But the point is, the government has throughout been steadfast in its commitment. Please make in India at least what you're selling within India, and we will give you subsidies to make that happen. So if you look at like a company like Dixon, they have gone from one category to another category, but the growth rate has not stopped. What growth they were doing 5 years ago, they're doing today also. So that would be like the most, I would say, obvious example of, and you can see this across categories. You might see this in pharma contract manufacturers. You even see this in like food contract manufacturers, a company like Hindustan Foods. It has done far better than all the FMCG stocks. So that and defense is what comes to mind. I mean, I would say anything manufacturing linked actually is what comes to mind.
Of all these themes that we've talked about, one thing I can see is that we couldn't have predicted any of these things in future. Nobody would have thought AI would become such a big deal back in 2020 when everybody was shit scared about code, right? But then it did pan out this way. Same is the case with the whole Make in India thing. Nobody knew how big it would turn out, and now we have companies like Dixon and Amber printing crazy money and the stock rise they've seen. But one thing that does stand out is, even though you aren't able to predict, but you will get as an investor enough time to act on it once it establishes. Can we build on this? Like, how do you?
Yeah, I mean, like a good example, let's take Dixon, right? So, okay, now Dixon is a business that can do no wrong. In 2018 or 2019, they lost one contract with Motorola and the stock fell 40-50%. And you had a big drawdown that you could act on. For example, you know that electrification and solar are big themes. There was an announcement earlier this year from, I think, Ultratech and Adani saying they will enter cables and wires. So you had KE and Polycab completely draw down 40-50%. You're from Bangalore, so you will appreciate this. Bangalore, regardless of the infrastructure issues, the long-term growth story has been pretty phenomenal for Bangalore as a city. But if you remember in 2024, March, there was this view that, Bangalore has run out of water and everyone needs to leave Bangalore. And Prestige, which is a very good builder in Bangalore, I think it fell to like 700-800 rupees at a 50% drawdown. And if you're from Bangalore, you know, boss, one rainfall 3 months later, it will get flooded, then people will forget about this whole drought thing. So I think opportunity, I guess, favors the prepared mind. So you have to study these businesses like deeply, but avoid the impulse to act until you see an opening, which makes it hard for you to lose your hard-earned money.
Now, before I wrap up this conversation, one last thing that I want to ask is, when we look at it, the global investing and thematic investing frame of thinking, what is one thing that, or maybe a few things that people usually get very wrong about it? Because abhi tak we've just focused on how to do, what to do. Maybe this way we can talk about what not to do and what not to confuse it as.
So this is my biggest pet peeve. This is something that we as a fund, our investors keep asking us questions that, bank A is listed at this PE multiple in India. It's in this different PE multiple in France. Or that, look in you can buy these auto companies in Korea for 3p or 4p, and here you're paying 30p, 20p. So why should anyone invest in India? And basically comparing valuations across geographies. So my sort of take is that is a very dangerous way to invest or to even look at stocks. And I'll explain why. There are like 5-6 reasons. The first reason is that India is a growing country. Some of these countries, the population is degrowing. So ultimately, the terminal value of a business is customers, but if the customer count is falling, how can you give it a terminal value? So that nuance is missed. The second thing is the sectoral composition. So in India, the index has a high composition of high ROE businesses, whether it's IT services, FMCG, so on and so forth. Now, if you take another country, maybe it has a high concentration of commodity businesses or slow growing or low ROE industrial businesses. Should it get a discount? Yeah. So you have not adjusted for the sectoral composition. The third thing is the regulatory environment. So let's take the example of car companies. So there's this pushback ke India mein 30p, Bharat 3p, right? But now if you look at what is the biggest problem that European or Korean car manufacturers make, it's Chinese cars, because these cars are high quality and they're really cheap and there is no restriction on their import. So they are losing market share every year. Now, a car business is a gruesome business. If you lose market share, fixed costs don't fall. So your profits can erode very rapidly. And there are many instances of that, right? Now, in India, there is that protectionism. So obviously, the car companies in India are making 15-20% ROE, which no one is able to make globally. So you should get some premium for that. Ultimately, your volumes are still growing. So that is the third nuance. The fourth nuance is PSU versus non-PSU. So, I mean, in China, some of the largest businesses, mobile telcos and stuff, are PSUs. Even if they're not PSUs, every company has a communist party like organization within it. It's because political sort of advancement is a big deal in China. Should you get a discount for that? I think so. We can debate how much of a discount, but discount is warranted. Then the next thing, rule of law. If a billionaire tech founder can vanish overnight, if companies' business models can be overturned with one stroke of pen, don't you think some discount is warranted? Like in India, if you're an infra player, you get a discount, right? So in other countries, if you have similar corporate governance risk, don't you think there should be multiple? So I just think there are these 4-5 very obvious sort of like differences that we as investors perhaps need to appreciate. That doesn't mean that low PE investing doesn't work. But just saying because it's low PE, it will work, and because you have bought at high PE, you will not make money, I think is simplifying the problem. Because if it was that easy, everyone would run a screener and then just normalize it, and then that strategy would get arbitraged away. So that is sort of one thing that I think people have to be really careful of. It really sort of bothers me when people compare valuations of like companies in Indonesia to India. In Indonesia, commodities like coal companies are 30% of the index. Coal India and India trades at 5-6 PE, but it's a small part of the index, so the index multiple looks higher. There, if it's 15%, it will look lower. So these adjustments.
I think that's the end of the conversation, but I know I've been a bad host.
No, you've been a great host.
If there is one thing that I didn't ask, after we've had this conversation, you understand what we were talking about, you have a feel. If there's one thing that you think I didn't ask and you want the audience to know, what would that be?
I think you asked all the right questions. And, I've done a few of these podcasts. Like what I really enjoyed is the fact that this wasn't like, okay, what should I buy? What should I sell? It was more sort of trying to understand the journey, because I think that is more useful ultimately, my guess for the end audience. So I really appreciate the fact that it had this educational tilt to it. So
I think then that's a job well done on both of our parts.
Yeah.
Thank you so much for your time, Sid.
Yeah, no, my pleasure to be here.